Good afternoon or good morning if you're tuning in to our live podcast session here at Fintech Nexus. I'm your host today, Todd Anderson. Before we jump in, just a couple of things to note. One, this is a live podcast, so if there are listeners to the live session and you have questions, please go ahead and use the Q&A box, and we'll get to those questions as we move through our conversation. And if you're listening on video, welcoming the video and audio viewing audience. This is the Fintech Nexus podcast with your host, Todd Anderson. And joining us today, we have Mike Tambone of Epsilon. Mike, if you could tell the audience a little bit about yourself and Epsilon, introduce yourself to the audience.
Sure. First, a little bit about me. I am a strategic marketing consultant with Epsilon. I'm part of the Epsilon data and technology team. My team and I work with retail bank, wealth management, and insurance clients to help them get the most of our Epsilon People Cloud marketing solutions. Our company's solutions, Epsilon People Cloud, is everything from data to databases to loyalty and messaging. And we work a lot in the customer identity and the customer marketing space. We are part of the broader Publicis group acquired by them a couple of years ago.
So our session today, we've titled it Rethink Customer Experiences During a Downturn. Obviously, we're hearing a lot in the news and all the time. We're in a downturn, we're on the way to a downturn, we're in a recession. And what we want to really talk about here today is kind of how companies, big banks, act differently and what they should do better when entering this type of period, which is a little bit different than the last couple of years, which seemed, a lot more easier to operate, a lot more free flowing budget and cash available. But now times have changed. And so, I want to kick off with, obviously companies don't act the same as they would in a fun or a good time as the last couple of years as they would into an impending recession or downturn. And so how should banks and fintechs think about, and what should they first think about when they are engaging and marketing to their customers during this type of period?
Yeah, it's a great question, Todd, and it's a question that a lot of our clients are asking as well, and I'm sure it's top of mind with many financial marketers today. I think when you think about banks and fintechs, if we kind of separate them a little bit, banks traditionally are kind of viewed almost as that big battleship, and turning that battleship is difficult, right? And that's because there's a lot of kind of organizational inertia that's moving them forward in one direction, and to try to change that quickly becomes difficult. Fintechs, I like to think of those as the nimble kind of ships on the water that those speedboats that can kind of move quickly. They're designed from the bottom up to be really digital first, tech first. But I think both of them have to kind of focus on this notion that we've got to change marketing to accommodate these marketplace conditions. And I think it's less about a wholesale change, and it's more of about fine tuning a little bit on the margins. When customers may be pulling back, maybe they're on the hunt for deals and bargains because of this economic downturn, it really becomes a question of demonstrating the value that a bank or a firm can add to a customer's life. And it really is about marketing your products as solutions and not just about products. So that requires a focus on truly knowing who your customers are and what's important to them at this particular moment.
And when we're talking about customers, you have your kind of core or customer base that have been there for quite some time, and then you have this new customer base that you're always trying to obviously acquire and grow and get bigger. But should they be thinking about these two audiences differently during this type of period? because ultimately you don't want to lose those customers that you've gained trust with and you'll worked to develop this relationship with over time.
Yeah, absolutely. I think you need to look at them differently. Someone who already knows your brand and your products and has a relationship with you will most likely have different needs versus maybe a brand new prospect. I say most likely because it really comes down to what we know about existing customers, not just the demographic data, but it's about what's on their mind and maybe what signals they're giving off right now about their current state and maybe their future needs. I tell my clients that it's we're in the state of marketing these days where it's about having the data that you need to power the marketing vision you want. And when you look at it through this lens, it's really about creating that seamless customer experience based upon what those customers want. And if you don't have data and information about your customers' wants and needs, then maybe you need to treat them like a new customer, right? But I think then it comes down to reframing your products as solutions, not just as products, and that all is hinges on what first party data you're able to capture on who your customers are, and then when you start to look at them as prospects, what information you're able to bring into that acquisition conversation, because then it helps to set up how your products can meet those needs. So
And
I'm
if
a
we
big fan of a something that I like to call, a one question pop up. And it really takes us back to kind of that core of what marketing is all about. And that's engaging your customers in a dialogue about, their brand or their product. For example, I had a Midwest, regional Midwest retail bank, and they had a ton of content about solving customer problems. And they used it a lot in their acquisition, a little bit in their existing customer marketing. And what we were able to do is to tee up a one question pop-up, multiple choice, 4 discrete outcomes that led the customer down a different path of content. And it really helped to reposition that bank as someone who was providing solutions for their customers. We were able to track those answers on the back end, and then start a dialogue with customers. And I think it's about kind of thinking about how to use your existing assets in a creative way. When we start to kind of head into a downturn.
Speaking of creative, obviously, if we think about this, the I guess near perfect way to market, we think of companies like Amazon and Netflix where, it seems that they're either listening to us in our own heads or they're always ready with, I open up Amazon or I go to Netflix and it's like, here's something you might like, or here's a product that you should buy based upon your past history. And obviously some of that is related to this great and innovative tech they have. Banks have this, kind of dual thing going on, which is they clearly need to iterate and keep their customers, more engaged, but their tech is kind of in this in between. They have legacy tech, which they need to kind of still hang on to, or at least continue to update. And so how do they work through some of these issues? They're obviously not going to just port over to a beautiful technology stack like an Amazon and be like, all right, we have all this capability now. But they don't necessarily need to do that to keep their customers more engaged and to keep their existing customer base, more precisely engaged.
No, you're absolutely right. I mean, I agree 100% with you that customer expectations for the digital financial service experience, they're set by, those digital natives that you mentioned. And I think everyone will acknowledge that there's this customer expectation gap. We fielded a study a couple of years ago, and we actually put a number to it. We said that I think it's somewhere between 28 and 30% difference in opinion between what a customer thinks their financial experience is, how they rate it, and where they want it. A big part of that was bridged during the pandemic when companies were forced to address it, but it's
Mhm.
still there. And in fact, short of a significant digital transformation of backend systems, there's really only so far a bank can go with some of those old legacy retail systems, and all the work that's organized around them. Most of these process data in batches overnight, versus some maybe fintechs, which are API connected or have cloud-based systems that can process in real time. I work with one bank that still executes campaigns using a waterfall process versus some sort of agile process. It takes them about 12 weeks to execute a quarterly email, and they have
Wow.
challenges processing the data to know if it's working. So they don't know the output of or the results of one campaign before they need to start work on the next one. So yeah, I think the systems and the org structure and the processes could use some sort of focused change and refresh. Now, short of all that, one area where I think you can make up ground today is around customer identity. And it's about pulling some of the first party data that exists. And let's face it, banks have lots of intimate uh,
Yep.
knowledge of who their customers are. We have to highly regulated industry. You give up a lot when you set up a banking relationship. You provide a lot of information. We get a lot from credit reports. We get mountains of forensic data if you want to pour through it, when you have a credit card transaction or a credit card relationship,
Mhm.
and you're able to get all of that spend data. And credit card companies have been great about mining it. They've been doing it for decades now, but it's about connecting all that information. And I think when you start to talk about customer identity, some sort of, if you have a poorly organized customer data, it's a major reason why I think brands fail to deliver on these personalized experiences that their customers crave. And instead of getting closer to your customers, I think a lot of banks can actually frustrate or maybe annoy them or even upset them, maybe kind of positioning products as, an upsell or a cross sell for maybe something that a customer already has or maybe isn't interested in. And I think what we're seeing here is that companies that fail to take action around this kind of missed or fragmented identity, they ultimately, risk kind of souring that customer relationship, which is absolutely the wrong thing to do in this day and age.
Is it that in part because do they believe that some of the like they're a bit like gun shy related to some of the technologies and do they is there some thinking that like hey we can't be Amazon or Netflix or and trying to be a version of that is not who we are, because I go back to the example you said about 12 weeks. I mean that feels like an eternity for a bank
Yeah.
to get out an email, and it feels like they're at such a disadvantage in some areas, and it's like does it eventually just catch up with them? Like how do they handle that type of dynamic between where the world is headed or is in some places
Yeah.
versus where they are?
I think there's a lot of will to do it. I think, certainly there's a lot of conversation and talk at the higher levels that, at the senior levels, the C-suite, that this is the path that needs to be taken. It's just getting the budgets and getting the people organized around that. And short of that happening, I feel like, most marketers are not going to have necessarily a say in that. And if we start to
Mhm.
talk about the actual folks that are executing the marketing campaigns, I do think there are some things that they can do, though, to potentially fine tune and maybe, work on the fringe, using the bits and pieces of information that already exist. And, sometimes organizations can't necessarily see the forest through the trees. So, I like to say, all right, as we head into a potential downturn, I think, as we may see kind of some of these tech resources being consumed maybe with some of these enterprise level opportunities, that are set on this longer term agenda. The marketing budgets we're seeing are staying firm, or maybe they're shrinking in some cases. I think there's maybe three things, if I had to kind of put them in buckets, that
Hmm.
we may be able to focus on for kind of the bread and butter marketer, right? I think we've got to make our current marketing to existing customers more effective. Now, how can we do that kind of in this day and age? It could be as simple as engaging your customers in that conversation. So, that one question pop-up, I think, comes to mind. And that's just one example that we came up with as a creative way to guide people down and connect them with content that already existed. I think it's potentially taking that to the next step of connecting it to content blocks in routine emails. You've already got the budget for emails. If you're sending dynamic emails, which a lot of companies are, potentially tailor that based upon a signal that you're getting through this one question pop-up, or maybe signals that you're getting through your marketing stack on where customers are on your own pages. So we can talk about ways that you can get some of those signals from off us properties. And that's something that Epsilon's been really focused on. And I think could be really compelling and interesting. But if we'll talk about that in a minute. So make your existing marketing more effective. I think we've got to keep as many customers as we can. And I think we got to really try to plug those holes in that leaky bucket. And for some folks, it may be as simple as going back to the basics on building and creating loyalty. As a former CPG marketer, I think of this as brand loyalty, right? So it's loyalty to the bank brand. We like to say at Epsilon that loyalty is an outcome, not a program. So, well, a lot of loyalty programs do exist. I think it's about using those loyalty programs in a more effective way. I mean, whether you've got some sort of tiered program or some sort of credit card based points or cashback program, I think we need to just take a hard look at how we're using them to engage customers and engage customers in with your brand and engage customers in ways that are going to make it, point them to some sort of digitally enabled experience. That could be something as simple as driving them to low-cost customer service channels, like maybe your mobile app that has got some digital self-help already built into it. Driving them to engage in e-statements if they're not necessarily just predisposed to e-statements. Driving them to engagement in those digital channels and connecting them with that information or content that you've already created. And then, I think the last bucket is about attracting new customers with some degree of precision. And we talked a little bit about treating these new customers differently. I think in a downturn more than ever, we need to be really precise with our marketing. One of our clients is a large issuer of store brand credit cards. So it's like, think of those as the mall cards. If malls still exist these days, I don't know if they do, but but we have something called our digital media service, and we can place ads with a high degree of precision in front of the right audiences. It's based upon our pseudonymous digital browse behavior, and our part of our customer identity solution. And we can track and understand what customers are browsing on, and then place relevant ads using some of our machine learning algorithms in front of the right customers. I mean, it's really cool stuff, and it works. We're able to target customers only in the market for a certain product or service, and we're able to make our marketing campaigns for our clients 20 to 30% more efficient. So it's taking existing dollars and making them work harder for you through the use of technology. So I think those three areas are probably a good place for folks to start. And just to sum up, it's marketing, to your existing customers more effectively, using loyalty to help kind of keep customers around, and then attracting new customers with that precision that the technology allows.
And you mentioned, the connection to the brand. And I can even think in my own experience with the various financial services firms, I'm more apt to utilize or get a new product with the smallest or simplest understanding that they're speaking directly to me versus speaking to 20,000 other people with, hey, borrower, here's a loan at X rate. It's, hey Todd, I saw you were a previous credit card customer, here's an upgrade to that with better rewards or something like that. I mean, the customers want that connection, that emotional connection to the brand of, I matter. And like you said, it doesn't always take this transformative process or technology. It takes a single pop-up or the right message to the right
Yeah.
person.
No, absolutely. And I mean, Todd, we don't need to go from one to many or one to everyone marketing to one to one. I think there are some small incremental steps that we can take, whether it's, one to a segment or one to a few, to make it feel like it's your marketing is speaking to that individual customer. A few years ago, I fielded some research, and the big aha, right, which I guess really isn't necessarily a big aha, but when you're doing research, there's got to be the big aha. It really wasn't that surprising, right? Is that people wanted to be treated like the good customers they knew they were,
Yeah.
right? I mean, everyone kind of feels like, you're this brand's number one customer, and everyone wants to be treated special with, some sort of high degree of touch. And when you talk about money, people get really touchy, right? They really want to know what's going on with it. And beyond what we discussed about offering solutions to people's financial problems or selling them a product, versus selling them a solution, I think we can really focus on offering a digital version of high touch, with that right level of attentiveness to the customer. And I'm thinking here about a couple of examples. Bank of America's Erica, US Bank has a smart assistant that's part of its mobile app, which offers up recommendations that maybe you're not necessarily taking advantage of. Capital One's all three of these are ML enabled automation that support a personalized customer experience. So on their own right, they're not going to be kind of the silver bullet, but
Yeah.
when you add that to one to few marketing, maybe you've done a good job of segmenting your customers and then tailoring some of your emails to those segments. You can tweak one or two content blocks, maybe based upon that one question pop-up that I mentioned, and then you can guide them to some sort of chat bot or some sort of virtual assistant. Those are breadcrumbs and steps on the way to creating a more personalized experience and driving a deeper emotional connection. Now, I mean, we're talking about banking. I think when I was at Visa, there was a survey that Visa used to put up that I loved. It said that your affinity for your credit card provider ranked right above your affinity for your toilet paper brand. So really far down the list is the point. And, people don't necessarily, they just want it to work. But I think we can kind of inject a new level of engagement there through some of these sort of digitally enabled tools and experiences that often exist. They're just not connected in the marketing.
Speaking of connected, and I know this will eventually be the $64,000 question, but you know, data is obviously key to all of what underpins what we've been talking about here, and to marketing in general. And I think banks in particular struggle with, I think famously, we were doing an event in China, and we had a Dutch banker with us, and I was just chatting with him, and he told me one time, like, I cannot tell you the amount of customers that we have at the bank, because small business doesn't talk to the mortgage department, the mortgage department doesn't talk to consumer lending, and so on and so forth. So he can give me a general estimation. And it made me think, like, how siloed is, either big banks or banking in
Yeah.
general tend to be a bit more siloed. And so how do companies like this begin to enable the data to work better for them and break down some of these silos so they don't deal in the situation of, hey, if you're a mortgage customer, then we don't know that if we're trying to sell you a small business loan for your small company.
Yeah, it's a great question, and I love the example you provide because it's true, right? It exists here. I mean, the
Yep.
fastest way to break down those silos, right? And when data isn't siloed, let's face it, it's a liability, right? It's not an
Yep.
asset. It's it's getting in the way of you effectively marketing, right, or effectively communicating to customers as a single person. I think the fastest way to break down those silos is, as with most things, it's by first acknowledging there's a problem. All right. And we've got to get all levels of the organization to acknowledge that the current state isn't working. And, it can be a huge step for some companies, right? Next, it's about centralizing that data in some way, shape, or form. I mean, heck, even if you're able to connect two business units' data together that are maybe related, you can probably do a better job of kind of mining some of that
Yeah.
data and understanding a little bit more about who your customer is. The Nirvana state, I think, and this is one that fintechs really, they're built from the bottom up and, and predisposed to kind of be cloud-based um, with their data or have it in, some sort of data warehouse or data lake. Um, that's going to be the best state, because then you can start to put some analytic systems on top of that to be able to mine that data and then activate it. But, short of a major transformation, identity-based solutions, I think, are a great place to start. Getting your identity right is critical because, without some sort of effective customer ID management strategy, companies just won't be able to generate some of those customer behavior analytics at a macro level, ideally at a, down to the detailed level. And that puts them at real risk. I mean, they're not going to be able to track and understand customer behaviors and preferences. They won't be able to gather insights from web pages, social media, or any of these self-service portals that we talked about. And they certainly won't be able to analyze a customer's path through some of their products so that you can anticipate future journeys with, maybe new customers or, new prospects. So I think in the end, effective marketing really starts with knowing your customers, and anything you can do to get more information about your customers is going to help, whether that's through the conversation, like the, digital equivalent of the, of that, when maybe is that one question pop up. Maybe it's through appending some third party data. It could be inferring data through models. It could be organizing your customers through a segmentation. It could be through kind of manipulating some sort of, or adding some sort of customer identity solution. It could be revamping your entire database, right? I mean, it's all going to help. And once you know your customers, then it's about really that next key step is activating that data, right, in that right channel at the right time. And that really is, it's marketing 101. Something that we've all been really trying to do is getting the right information in front of the right customer at the right moment to drive them deeper down that conversion funnel. Um, I guess maybe one final thought that I'll leave you with is, when I
Hmm.
first started out in my business career, I won't tell you how many years ago, but I had a mentor who said that business on the face of it was a creative enterprise. And, I must have looked at him with some speculation, because he quickly qualified that by adding that all companies play by the same rules in the same environment. And yet, through the individual creativity of the business owners and operators, every business is unique. Every brand is unique. So, I'm excited about the creativity that exists in business. I think we're seeing a lot of fintechs, kind of deploy that creativity, and that's just part of their DNA. I think we're seeing a lot of legacy banking clients start to reimagine and reinvent themselves. And that's exciting. So I'm upbeat and confident as to, that we're going to be able to solve this and figure it out. It's just gonna, we've got to start now. Nothing motivates like a deadline, or I had someone say, early on, a kick in the ass is a step in the right direction. So maybe the downturn is the push we need.
As we wrap up here, if anyone listening on the live side had any questions, feel free to use the Q&A box. But if someone listening either now or in the the podcast or YouTube version of the video wanted to reach out and get in touch, or understand some of the solutions that you guys provide and of what we talked about here today, how can they do that? How can they reach out to you or Epsilon and get that conversation started, as you said, before they, we're knee deep in the recession?
No, happy to help. I think the place to start would be to go to epsilon.com. Very simple, to learn a little bit more about some of the stuff that we talked about today. And you can reach out to me, michael.tambone at epsilon.com. And if you put Fintech Nexus in the subject line, then I can guarantee that you will get a speedier response.
Well, Mike, I appreciate you giving us a few minutes of your time here today. Thank you to those that were listening to the live session and to those listening to the video or recording. Thank you as well. Special thanks to Epsilon for your support, not only for this, but I know you've been longtime supporters of ours, and we appreciate that support. We obviously can't put on great content like this and other stuff without supportive partners like you. Thanks again, Mike. Thanks again, Epsilon. Enjoy the rest of your day, everyone.
All right. Thank you. Take care.
Thank you.